So in this video, I'm going to be speaking about what actually goes into buying your first home. So by the end of this video, you're going to have a clear idea and a clear roadmap of everything you need to think about and do to safely secure your first home. Before anything else, the first thing you want to do is actually understand your affordability. Now, one quick way to do this is actually just to speak to your mortgage broker, and they will look at your situation, assess your situation, and then be able to advise you on what lenders will be able to lend to you and what the borrowing, aka mortgage, would be. However, you can get a good idea initially yourself. So generally speaking, lenders will lend anywhere between 4.5 to about 5.5 times your salary. Now, there are a lot of caveats to this. If you have a lot of outgoings, a lot of spending, then they can sometimes reduce this. It depends on the lender's risk appetite. Other factors go into it as well. So for example, your credit report. So the better your credit report is, the more options it's going to give you in terms of lenders. Now, this doesn't necessarily mean that if you have a bad credit report, that there's no lenders that are going to lend to you, because now there are actually some specialist lenders. However, if you can improve your credit score, definitely do so. And there are some quick ways you can do this. So get on the voters roll. If you don't have a credit card, get a credit card, spend it a little bit and pay it off in full every single month. If you can show that you're able to pay off debt, this is going to boost your credit score and improve how your whole credit report looks. So now that you've got estimation of what your borrowing is going to be, think about what your deposit and your other fees are going to be as well. And you can put that on top of your borrowing. And with that, you also want to understand what percentage deposit you actually want to put into the property. Is it 5%, 10%, 15, 20%? So the higher the percentage is, the more favorable the interest rate is going to be, because you're putting up more of your money into the property. So there's less of a risk to the lender. If for whatever reason they have to repossess it, the more of your money is in the deal, then the more likely they are to get that mortgage amount back when they go to sell it. The more you're able to put in as a deposit, the more favorable your mortgage payment and interest rate is going to be. It doesn't necessarily mean though you should max out your deposit as much as you can, because obviously there's an argument that actually you could potentially put some of that money elsewhere and invest it somewhere else, or have some savings there if needed as well. But you want to strike some balance, because there are lenders that will actually give you more borrowing if you are able to put more up as a deposit as well. Then when you've done that, then you want to speak to a good mortgage broker that specializes in residential purchases. So they will then look at your whole profile, and then from there, provide you what we call the decision in principle. So a decision in principle is a pre-approved mortgage offer, where the lender's on their initial check and they believe that based on all the information that they have, they would be able to lend to you the amount that you're looking for. Now, the mortgage broker is going to need some information to be able to do this. They're going to need a proof of identity from yourself. So this could be a passport. They're going to need proof of address. So this could be either a utility bill, driver license, council tax. They're also going to need bank statements as well. So 3 months bank statements showing general spend and transactions. They're also going to want to see a credit report. So I use Check My File, but there are others that you can use, that Experian, and this will show your credit score and your full credit report as well. In addition to that, they're also going to want to see proof of income as well. So this could be 3 months pay slips, or if you are self-employed, then you're going to want to show the last 2 years of tax returns as well. So this may have been done with your accountant, and this will then be used to actually get the decision in principle for you. Now, once you've got this, now you've actually got enough information to now actually go searching for properties, because you know what your affordability is. You know what your deposit amount is going to be. You know what your mortgage is going to be. So based on that, you know what property values you're looking at. And that should then enable you to actually focus on specific areas that you're comfortable living in. Now, you also want to account for other fees as well. So stamp duty is one. Now, if you are a first-time buyer, then any properties up to £300,000, there is no stamp duty. And any properties between £300,000 to £500,000, there is a stamp duty of 5% in between that amount. So for example, if you purchase a property for £400,000, then the stamp duty there will be £5,000, because 5% of the difference between 400 and 300,000, which is £100,000, is £5,000. However, it's worth noting that if you do purchase a property as a first-time buyer above £500,000, then you lose all first-time buyer, stamp duty allowance, and you will just pay standard stamp duty tax. So that is something to bear in mind. If you are looking at properties around the £500,000, then it's worth trying to negotiate it slightly down, so that can save you in stamp duty tax. And then from there, you actually want to be searching. So you want to search for properties that you're comfortable with. And now you're more than likely going to be using online portals such as rightmove and Zoopla to actually search for properties. So you want to put your filters in, whether it's 2 bedrooms, 3 bedrooms, whether it's freehold, leaseholds. I am a fan of freeholds. So if you can avoid buying leaseholds, I would suggest you do, because leaseholds mean that you own, generally speaking, an apartment flat within a bigger building. So you have to pay service charge and ground rent. There's extra fees. However, if you buy a freehold, that means you own the land that building sits on, so you don't pay any of that. And you have a lot more control over the house, and if you want to make changes to it, there'll be a lot less friction. So if you can, do look at freeholds, and from there you can then search, put in your purchase price range that you're looking at, and then you can actually just look through houses, look through Rightmove, and actually select the ones that you're more interested in. And this will be based on, of course, the purchase price, the pictures, and what the actual house looks like. So from there, if you're comfortable with what you're seeing, so perhaps you want it to be close to a station, perhaps you want it to be close to schools, perhaps you want it to be close to supermarkets, shops, anything like that. If you can see that, then from there, you can then look to call the estate agent. So there'll be a number attached to that listing, and you can call the estate agent and then actually ask further questions from there. Understand why the seller's selling. Understand if there's any issues wrong with the property. Are they aware of any damp, mold? Are they aware of any structural issues? Are they aware of any roof issues? This is really important. Also understand what the EPC is as well. The EPC, again, you can see on the listing. So this will range from A to G, A being the highest and G being the lowest. And this ultimately tells you how energy efficient the building is. And you also want to ask the estate agent if the seller is actually willing to negotiate on the price as well. A lot of times they actually are, but you won't know if you don't ask the question. And once you've asked these questions, you've looked at the listing, you're comfortable with the pictures, then you can actually book your viewing. And then from there, just ensure that you're actually really studying the house, seeing if it looks like there's any defects or anything wrong with it. Also look at the street, the area, speak to strangers in the area as well. Strangers are a lot more likely to be honest and forthcoming with you. If you just ask them generally, I'm looking to potentially move out here, what's the area like? And they're going to be able to give you a lot of insight. So from there, if you're still comfortable and you're happy, then put in an offer on the property. Now, the first offer you put in, you generally don't want it to be an offer that's going to get accepted, because then you could have gone lower potentially, right? So put in a reasonable offer, which is quite low, and then move from there. Now, you should have a ceiling offer in your head that you're not going to move further up from that amount, because you don't want to pay over the odds for a house, for a property. You don't want to pay more than you need to. A good way to know if you're going to pay more than you need to is actually to check for other sold houses in the area that are very similar to that property. So you can do this on Rightmove, look at sold houses, put that postcode in for that house, and look at a quarter-mile radius and look at the sold amounts for the last year. And that will give you a good idea if you're paying over the odds for the house or you're getting it for a good price. Because over here, we want to make sure that we're getting properties for a fair price. We don't want to be overpaying where we don't need to. And now, if your offer gets accepted, this is now where you actually want to advise your mortgage broker to then make a full application for you, make a full mortgage application using the right lender for your specific situation. And then you'll use a solicitor as well that's going to be able to do your conveyancing for the property purchase, and then also is going to instruct searches as well. Now, when it comes to a solicitor, they can either make or break a deal. The reason why I say this is because 1 in 3 property purchases actually fall through. What this means is for every 3 properties where there's an agreement between the buyer and the seller at the beginning, so you put an offer, they've said yes, a third of those never actually reach completion. And there's a multitude of reasons why. But having an incompetent solicitor can definitely be one of them. So you want to make sure you're using a solicitor that's efficient, timely, and is not making silly mistakes, and is also fair in their price as well. If you can get a solicitor that can tick all those boxes, amazing. And I always recommend speaking to someone that's actually used a solicitor before. So if you can get direct recommendation from someone, even better. And then through there, you'll move through the conveyancing process, you'll move through the searches, your solicitor will raise inquiries as well to the seller solicitors, there'll be some back and forths. And then hopefully you'll then move towards exchanging and completing and have your keys in hand. So the buying process, when you first do it, can definitely feel daunting. So it's always important to ensure you've got a good power team around you. Ensure that you've got good solicitors. Ensure that you're working with a reputable estate agent, and definitely ensure you've got a mortgage broker that knows what they are doing. If you've got a good power team, it can definitely lift the load. So hopefully this video has helped you understand what buying your first home looks like and the key things you want to think about. So if you enjoyed this video, do give it a like, and if you found value from this video or any other video on the channel, then do subscribe as well. And until next time, happy investing.